So guys, welcome to today's session. In today's video, we're going to be discussing on zone and refinement. As you guys all know, no matter the strategy you trade in the forex market, you need a zone. You need a zone to trade from. It will be it breakout, be it smart money concept, be it trend line, be it whatever you trade in the forex market. Literally, you need a zone to trade from, and that is what makes your strategy strong in the forex market. So today's video, I'm going to be discussing with you guys all the zones, that the 5 major zones that the smart money react from in the forex market. Sometimes they react and reverse, sometimes they react and break out and continue the trend. So the number one zone in the forex market, as you guys know, I don't like wasting your time, so I'll like go straight to the point. And the number one zone we're going to be talking about is the imbalance. So what is imbalance in the forex market? Imbalance is where there is a lot of sales or a lot of buy in the forex market, causing an inefficiency in the forex market. Let me just say an imbalance and inefficiency in the forex market, causing a leftover orders in the forex market. Without let me forget about the dramas and just show you guys what imbalance is in the forex market. So like as you guys can see on my screen right now, this is an imbalance. This is an imbalance. This week and this week right here, there is a space between it. This is an imbalance. In between, you can see this candle has a wick, then with a full body candle, then the third candle also has a wick with a wick on it. There's a candle, a wick, full body candle, a wick. Then in between these wicks is what we call an imbalance in the forex market. So the smart money will always like to come back to that imbalance and fill up the imbalance. But when they come to this imbalance, it's not guaranteed that it's going to reverse the trend. But most of the time they reverse, but sometimes they also continue the trend to the downside. So in my order flow strategy, I will show you guys. I'll show you guys how to trade the continuation in case price decides to continue. Now this is another imbalance right here. We have another imbalance right here. You can see we have this bullish candle, bearish candle, and also a bearish candle. In between these two candles, you guys can see there's an imbalance in between it. But as you guys can see right here, when price come to that imbalance, what did you guys see? Price broke out of the imbalance and then continued to the upsides. Literally, I'm on the daily time frame currently, so let me see. As you guys, this is another imbalance right here. Another imbalance right here. You guys can see you have a bearish candle, another bearish candle, a bearish candle. You can see there's an imbalance right here. So when price react to this imbalance, you can see price reject to the downside immediately. This is a daily time frame. If you go to the 5 minutes time frame and the 1 minute time frame, this is a very massive sell to the downside. So continue like that. We also have another imbalance right here. Another imbalance right here. When price come to this imbalance, what did you guys see? There was a direct breakout and a continuation to the downside. So price continue like that. There's also an imbalance right here. This is an imbalance. Make sure you guys take note of all this zone I'm going to be showing you guys, because this is what you need to trade no matter what strategy you use in the forex market. This is another imbalance right here. So when price go back to that imbalance, what do you guys see? Price react to the imbalance and then drop drastically to the downside. Now this is another imbalance right here. When price come to the imbalance, what do you guys see? Price reject to the downside. Sometimes price go to one of those zones and then react and reverse. Sometimes it goes to there, react and continue. But if you know what you're doing, no matter where you want to go, you're still going to make money. So you guys can see also an imbalance right here. When the imbalance was created, the next day price drop back to fill the imbalance, and when you fill the imbalance, what did you guys see? Price move drastically to the upside. So if you are on the 5 minutes and the 1 minute days, that there will definitely be a good opportunity. As you guys can see right here, there's also an imbalance right here. So when price come to the imbalance, what did you guys see? It filled the imbalance and then continue to the upside. If you're on the 5 minutes and the 1 minute time frame, there will definitely be a good setup for you guys to take from this place. So let me just show you a couple of examples as well. This is also an imbalance right here. So when price come to this imbalance, there'll always be a setup to continue the price down. This is not the video for setup. I'm going to do a separate video for setup. So I'm only trying to show you guys the different zone we have the forex market. So make sure you have your pen and paper to jot down whatever I'm teaching you guys in today's video. Let's continue. This is also an imbalance. When price came back to fill there is a candle and also a candle right here. So when price came back to fill this imbalance right here, what did you guys see? There was a drastic move to the upside. There is an imbalance right here. There's a candle, another candle, there's an imbalance right here. So when price come to the imbalance, what do you guys see? Price move drastically to the downside. So that is it. I think I have shown you guys enough examples. So let's go to the next example. The next example is equal candle close. Now equal candle close is where two candle closes. Why do price react at an equal candle close? Price react at an equal candle close because that is where people normally place their stop loss and also known as liquidity point. So as you all know, in the forex market, liquidity is needed for the price to move in the forex market. So let's take some examples we have in the forex. We have so we are still on the daily time frame. Let's see if we can see some examples. So we've not seen any example, but as you guys can see, there's this we have a candle here, another candle. There's an equal candle close right here. So when price got to the equal candle close, what did you guys see? There was a sell back down, equal candle close. So you have to mark the zone and refine it. I'm going to be showing you guys how to refine the zone in my next video, but this is just for you to identify the zone. Now this is an equal candle close. And when price comes, price rejects off it and then drop drastically before it starts consolidating right here. Now let's go straight. Now this is also an equal candle close. As you guys can see right here, there's an equal candle close right here. And when price come to the equal candle close, you guys see there was a rejection and then a reversal to the downside. We also have another equal candle close right here. Let's see. We also have another equal candle close right here. Another equal candle close. When price came to this zone right here, there was a massive sell to the it's massive buy to the upside. This is an equal candle close, a very important point in the forex market. An equal candle close. So in my next video, I'm going to be showing you guys how to refine these zones and also discuss on setups. But this is just to make sure you guys understand the major zones you have in the forex market. This is an equal candle close. So this is also an equal candle close right here, an equal candle close right here. When price came, price rejects and then continues to the downside. So it's also an equal candle close. As you guys can see, I'm showing you guys these examples on the daily time frame. This is an equal candle close close right, another candle close. When price move back to the equal candle close of that day, of the last 2 days, and then fill out and then close out the liquidity and then move drastically to the downside, as you guys can see right here. So those are examples for equal candle close. As you guys can see on these terms right here, you guys can see a very clean equal candle close right here. Equal candle close. When price today, this you can see the day closes, another day close, there was a little bit of consolidation right here. When price after this day, price move back to close this liquidity right. As you guys know, equal candle close may represent liquidity, and if you don't know what liquidity is, just go to Google, go to YouTube and watch videos on liquidity. You understand? So I just want to keep things simple for you guys to just I like keeping things simple, so I'm not going to go on to all those liquidity, this and that in the forex market. So equal candle close. When price go, we can see price get back to the equal candle close, mitigate the liquidity and then move drastically to the upside. You guys can also see right here there was an equal candle close right here. After this candle closes, price came back to the equal candle close to close it before moving to the upside. And price continue like that. You guys can also see, and there are countless examples in the forex market like that. So So this is also another equal candle close right here. When price came to that area, you can see there was a rejection and then it dropped to the downside. Equal candle close right here, equal candle close, you can see there was a rejection right here. That's why you see this consolidation and then a continuation to the downside. So that is equal candle close for you guys. So the next one on the example on our list is the supply and demand zones. Now when it comes to supply and demand zone, I'm going to like explain a very brief. There is more to supply and demand zone, but I'm going to explain just briefly on supply and demand zones. Then in the after I'm done with this with these videos and all those sorts, I'm going to be doing a special video for you guys on supply and demand zone. But let me just go through a little bit of supply and demand zone for you guys. So supply and demand zone is where there is a massive buy, then a massive buy or sell. Then but before the massive buy and sell, there was a consolidation state before the move to the upside of the move to the downside. That is supply and demand zone for you guys. So let's just go. Now we have 4 types of supply and demand zone. We have the rally to the upside. We have where price will rally to the upside, create a base. We have the rally base rally. We have the drop base drop, and we have the rally base drop and the drop base rally. That's the 4 type of supply and demand zone we have in the forex market. Let me show you guys some of the examples and see what price did when price get to any of these supply and demand zones. So basically, in a layman term, what supply and demand zone means is where you see present of one big candle, another small candle, and then another big candle. That is, it can be 3 candles, it can be 4 candles, it can be 5 candles, it can be 6 candles, it can be 8 candles, but there has to be a very big candle followed by small candles, then followed by another big candles. Then the smallest candle among those consecutive candles is where your smart or demand zones lies. Now let's see if we can find any supply and demand zone right here. You guys can see there's a big candle right here, and that's another big candle. You guys can see this small candle at the middle. This is your SND zone. So when price come in, price definitely reacted. That is why you see when price come to this place, you can see this week to the downside right here. If I don't want to go to the 1 minute time frame, I'll show you guys something. So when price come to price actually reacted down to this place. That is why you guys can see this week to the downside before the move continue upward. Now this is supply and demand zone. You guys can see there's a big candle, a small candle, and also a big candle. This small candle at the middle right here is your supply and demand zone. As you guys can see, there's a big candle followed by 2 small candles. The smallest candle among these, a big candle, small candles, and then another big candle. These small candles, the smallest candle in the middle is where your supply and demand zone lies. As you guys can see, this is where your supply and demand zone. As you guys see, when price react to this supply zone and this supply zone right here, price drop drastically to the downside. Let's continue. Let's see if we can see another couple of more. This is a very perfect supply as a demand zone. You guys can see when price there was a massive sell, there was a consolidation, and also a massive buy. This is a very perfect supply and demand zone. When you go to the 1 minute and 30 minutes or 30 minutes, 1 minute, or even 5 minutes time frame, you will see a good continuation setup around this place. Now this is another massive candle followed by another big candle, but before this close of this candle there was a consolidation state in between. So when price, as you guys can see, price react back to the supply and demand zone before it continue moving to the downside. So that is it. Let's see if we can see a couple of more. As I told you guys earlier, I'm going to be doing a detailed video on supply and demand zone because I'm trying to subscribe to my trading view so that I can use the replay bar to explain better, but it's declining my card, so I don't know. I'll use this chart to explain as much as possible. Then later in the future, I'm going to try to subscribe to my trading view so that I can explain in details. Let me say next week or upper, when I got a MasterCard, I'll try to pay with my MasterCard because my Visa is declining. So let me just explain as best as I could on this chart for you guys. So this is a very perfect supply and demand zone as well. I just call it supply and demand zone. There's no need to make anything fancy in the forex market. Just keep it simple as possible. So there was a big candle right here, followed by a very tiny candle on the daily time frame, for another massive big candle. So when price comes to that supply and this demand zone right here, what do you guys see? There was a massive buy to the upside. That is it. That is how price moves. So price continues like that, and this is, as you guys can see right here, there was a very massive sell followed by two small candles. Then there was a massive buy to the upside. You guys can see the smallest among these two candles is this one. When price comes to that candle, what did you guys see? There was a very massive sell to the downside, and that is supply and demand zone for you guys. Now this is another perfect example of supply and demand zone. There was a massive buy candle followed by a very tiny buy candle, then followed by another massive buy candle. This small candle at this bottom right here is your supply and demand zone. When price come, what did you guys see? It was a massive buy to the upside on the daily time frame. Now this is another example. There was a very big candle right here, a very big candle, which there was a drop, base and drop. Now when you see, as you can see, there was a very tiny. This is your supply zone. When price come to that SND zone, there was a massive sell to the downside on the daily time frame, and it continues like that. Now this is another example. There was a massive sell. Then we have two consolidation candles followed by another massive sell. Now where price this, what is the smallest candle among these two candles in between? It is this one. When price come back to that candle, what did you guys see? There was a sell back down before this move to the upside, and that is it, guys. So that is supply and demand zone for you guys. Make sure you take note of all these things. You must not depend completely on what I'm showing you guys. Also do your own research, so that you can broaden your knowledge on what I'm showing you guys. I'm trying to make everything simple, but don't focus on just my teaching. You can just go to YouTube, try to get some knowledge a little bit more about supply and demand zone again. But this is me trying to keep everything as simple as possible for you guys. So the next thing we're going to be talking about is order block. What is order block? Order block is when there is a move that's a buy to sell or a sell to buy candle, a buy to sell region in the forex market. So let me see if I can see a couple of examples. Let me go to the forward time frame. Let me see, I'll see more setup there in the forward time frame. So let me go to the forward time frame if I can see. So as you can see right here, there was a sell to the downside. Now this is the last liquidity sweep. Have the last liquidity sweep, and then a change of character. This is the last liquidity sweep. Then they have a change of character right here. This place right here is your order block. The last point before the price breakout is your order block. So if you are trading the order block, we're expecting price to come back to this place. Then price come down. When it comes to strategy, I'm going to teach you guys on how to keep things simple. I'm only trying to give you access to all the possible knowledge you have before I can simplify everything you need to know about forex trading. So that is order block. Order block is when price is coming down, but this one price broke out. You can see price broke out with multiple candles. So price was just in a very bearish downtrend. Now when price changed character, there was a liquidity sweep right there. I also explain liquidity sweep in my future videos. So there was a liquidity sweep, then they have a change of character right here. Now when price changed character, this point right there before the change of character is your order block. Let me see if I can see another examples added. As you get here, this is another perfect example. Price was in a bearish candle right here. Price pushed to a bearish candle. Price take out the low, proving I want to continue going down, but it shoot to the upside and then continue going down. This point right here is your order block. This point right here is your order block. Let me also go back to, so as you can see, there was also a trend, a kind of a trend right here. It's another one. There was an up, a little bit uptrend right here, and then price pushed to downside. This break of change of character right here is your order block. It's your order block. So just make sure you have your pen and paper. Anyway you don't understand, go to the comment section and drop your question, or you DM me on WhatsApp, or you drop it in the group section. As you can see, there was a trend. There is a trend right here, a trend to the upside right here, a trend to the upside. There was a trend to the upside right here. So when you can see, but when price sweep liquidity right here, there was a change of character right here, a change of character. When price change character, as you can see, price came back to the order block and then moved drastically to the downside, and then drastically to the side. And this is another point. There was a sell to the downside, sell to the downside. As you guys can see, price change character right here. When price change character right here, and then move to the upside. When price come to the order block that changed that character, the order block that was broken, this is an order block. When price came to the order block, there was a sell to the upside. So this happens regularly on the forex market. The only thing you need to do now as a forex trader is for you to train your eye to see all of these different zones and how to master them. Believe me, it's not going to be easy for you guys. It's going to take you a lot of times for you to master all of these things, but believe me, it's worth it. It's worth it, guys. And you can see, as you guys can see, there was also a buy to the upside. Price was going to the upside. There was a liquidity sweep right there, and also a change of character right here. When price came back to the other block, what did you see? There was a drastic sell to the downside. So that is how things works in the forex market. Let me see if I can see other couples of examples in the forex market as well. And as you can see as well, there was a sell to the downside right here. There was a sell. Now there was a liquidity sweep right here, and then a change of character. What did you guys see when price came back? What did you guys see when price came back to the zone right here? When price came back to that other blow right here, I'll explain the rule of 6, but this work based on rule of 6, and sometimes when you break out with trend, you use the rule of 6 to refine it. And then there was a push to the upside. As you can see, there was also a buy to the upside, the buy. Now when price came to the other blow, what did you guys see? There was a massive sell to the downside right here, a massive sell to the downside right here. So this is another one. We have another one right here. We have a very bearish candle moving to the downside, and then we have an up, a change of character right here, a change of character. When price changes character, what did you see, guys? What did you see, guys? Price came back to the zone. This one break out with trend. That is why you see price coming back to the zone. If not, it should have reversed exactly from this other block. But what did you guys see? Price came back into that zone because it works based on rule of 6. I'm going to explain rule of 6 in my next video. So when price came back into the rule of 6, there was a very massive buy to the upside, which is very perfect. This another, but just know that the zone is not going to hold 90%, 100% of the time. Sometimes zone is going to break out. As you can see that there's another block right here. This is a sell, liquidity sweep, and then a change of character. Have a change of character right here. When price came to the change of character, what you guys see, price reject and then continues the downside. So that is why you need to position yourself to make money whether price is breaking out or a changing character. So that is it for you guys. That is it for you guys. So when price is going to the upside, there are so many examples. If you guys don't understand anything right here, make sure you just drop your questions in the comment section. Go to my WhatsApp group and drop your questions. If I come across any of those questions, I'm definitely going to be answering you guys. So the price was going up, there was a liquidity sweep right there and change of character. What do you guys, when price came to the other block, price came to the other block and then continue going to the upside. That is other block. Other block simply means when price, let me say price is moving up, price take out, sweep liquidity, then change character. That is other block for you guys. So if you have any question, definitely you guys are going to have, make sure you go to my YouTube, drop it in the comment section and all of those stuff. You can see there was a massive sell to the downside right here. Then we have liquidity sweep right here, liquidity sweep, then a change of, we have liquidity sweep and a change of character right here, and a change of character right here. Then we have a valid structure created. When price came back to that zone, what did you guys see? There was a massive come back to that other block. What did you guys see right here? What did you guys see? There was a massive buy to the upside. So now it continues like that, so this is another one. The price was in a downtrend right there. Price was in a downtrend. You guys can see there was a liquidity sweep right there, and then a change of character around this place. When price came to the other block right here, there was a massive buy to the upside. I'm not trying to train you guys to show you guys different zones. This is not a strategy, this is the zones. I'm trying to show you guys how to identify the zones. So the next zone we're going to be talking about is what is the 3-week liquidity. So this one is one of my best so guys, the last type of zone we are going to be discussing about is the 3-week liquidity. So the 3-week liquidity is the last 3 weeks. When price comes to this week, price normally rejects of this week. So let me show you guys how the 3-week liquidity happens. As you guys already know what liquidity is, when I say the week liquidity means liquidity that is found on weeks of the candle. So as you guys can see, there was 3 candles right here, 1, 2, 3. There was a liquidity this week right here was taken out by this week, then it created, and then the third one also created another week that could not reach the height of this other week. So this space, the space between these 2 weeks right here becomes a liquidity zone. When price come to any of those zones, what do you guys see? There was a rejection to the downside. Now let me show you another example. There is this week right here close with this candle has a wick on it. This second candle right here sweep the liquidity on that week. Then the third week also created another week. The third candle created another week. Then when price, now in between this week and this week right here becomes a liquidity zone where price will definitely reject from. When price came to that zone, what did you guys see? Price react and then reverse. There was, let me see if I can see some couples of examples. There's also, let me see if I can see some couples of examples right here. This is another example right here. You can see this week, this candle created this week. The week on this candle take out the low of this week. Then this other third week created the third candle created its own week. In between this week and this week is what we call liquidity week. When price came to that liquidity week, what did you guys see? There was a drastic buy to the upside. So let me see if I can see another example right here. So we have this candle right here created this week. Then this other candle, his own week, take out the low of that candle. Then the third candle also created its own week. Then in between this candle and this candle is another week liquidity. When price take out the liquidity on those 2 weeks, what do you guys see? A drastic push to the upside. So this is another example right here. This candle created its own week. This bearish candle right here take out the high of that week. Then the third candle make his own week, also created its own week, but the week did not take out this high, the high of this candle, so it becomes a weak liquidity. So when price came to that week, what did you guys say? Was a drastic sell to the downside before that. And then this look another one right here. This big candle right here, there's a week. This candle take out that week, but this third one, his own week did not take out this one. So in between this week and this week, what you guys see, there was a rejection, a massive rejection to the upside. So you can see this weak liquidity push price to the downside. Then this other weak liquidity push price back to the upside again. Then another weak liquidity finally push price to the upper side. This is another example right here. There's a week right here. This week take out the liquidity on that week. When price came, then the candle closed. Another candle closes right here. Then there is a weak liquidity in between these two candles. When price came to that weak liquidity, what did you guys see? A massive sell to the downside, a massive sell to the a massive buy to the upside. Now we also have another 3 candles right here. 1, 2, 3. This candle right here, this other candle take out its own liquidity. Then we have 1, 2, 3. Liquidity pull at this place. When price came, what did you guys see? There was a massive sell to the downside. You can see this. When price came to that zone, there was a massive sell to the downside before another push the upside. Let me see if I can also see a couple of examples right there. Other couples of examples, if I can see. So this is another example. We have 1, 2, 3 candles. There was a weak liquidity right here. Price came to that weak liquidity and then a massive buy to the upside. This is another example right here. Another example right here. 1, 2, 3. A weak liquidity right here. When price came to that zone, what did you guys see? A massive sell to the downside. If there's anything you guys don't understand, make sure you drop your questions, your confusion on the comment section. I'm going to be attending to everyone as best as I could. As soon as you can see right here, there's 3 candles right there. 1, 2, 3. You guys can see this is 1, 2, 3 weeks. This week liquidity was swept. Then we have another unliquidated liquidity right here on this place. When price came, you guys see a massive sell to the downside. So that is it for you guys. These are the zones we have in the forex market. Make sure you watch this video as many times as you could until you start noticing or knowing the difference of how the forex market. Then in my next video, I'm going to show you guys how to refine this zone. Then after that one, we should go straight to strategy. So make sure you subscribe to the channel if you're watching this on the comment section. And if you have any questions, you know where to drop the questions already. So bye for now and see you in the next video.